Well, we've got a lot to really dive into here on the day. President-elect Trump on Friday announcing billionaire hedge fund manager Scott Bessent as his pick for Treasury Secretary. Stock futures and bonds rally on the news. Joining us now, we've got Ed Mills, who's the Raymond James Washington policy analyst. Ed, just want to start off with your reaction to this pick.
I think for Donald Trump picking Scott Bessent for Treasury Secretary, this is the exact pick the market wanted. Someone with significant investment experience, especially in the macro environment. If we look at the Trump policies on trade, on tariff, having someone who understands the knock-on effect of that and can help position the United States to mitigate that, especially in other parts of his agenda. I'm sure we'll talk about tax cuts. I'm sure we'll talk about deregulation, but this is who the market wanted. And getting this pick is part of the reason why we see futures in the green this morning.
One of the things that is really jumping out to the street this morning is maybe it's going to lead to a more measured approach. We talk about some of the extremes that we've heard from President-elect Trump, and very much that maybe is the driver here to this morning's early market reaction to this pick. We actually got the chance to speak with Scott Bessent earlier this year, back in July, about then candidate Trump's proposed 60% tariffs on China. I want to play a quick soundbite of what we heard from Bessent.
We hear 60% tariffs on China. That's the beginning of a maximalist negotiating position. That's the way President Trump negotiates. I would be surprised if we ever hit that. But I think, given his record in Trump 1.0, he has a lot of credibility in using tariffs to negotiate.
And are you confident that we are going to see that more measured approach? And I guess maybe what should investors then be expecting when it comes to some of these policies?
Yeah, Seana, here at Raymond James, we put out an investor's guide to Trump 2.0 as it relates to taxes and tariffs last week. And it's exactly what we said. There is going to be a certain part of the Donald Trump agenda that is trying to pursue that maximalist pressure. But Trump is also a negotiator. So when we see Howard Lutnick at Commerce, that's the maximalist at Commerce pushing for that. At Treasury, this is a good balance, someone who has called for this to be layered in, someone who will be directly negotiating with Congress on that tax bill. And my expectation is in that tax bill, they're going to give the president new authorities to enforce reciprocal tariffs. And so what Donald Trump will say to countries across the world is, if you have barriers on U.S. goods, I am going to put on tariffs. If you are willing to take those tariffs off, we can do a free trade agreement. So anything that's balanced, anything that's layered in is going to be viewed as a positive to this market versus kind of that maximalist, impulsive push for tariffs on day one.